What is up? Holy moly. What a morning. Let's go. Spiders in the house. The Crew Minute. Welcome, guys. What another Monday. I mean, I had a lot of calls. That's all I'm going to say. Woo, woo. It was kind of looking spooky there early, and I was like, we'll see. True story. I did take some spy puts out of the gate just in case, but yep, quickly closed those, and I'm happy. I would have taken that trade 10 out of 10 times, man. I'm just gonna say. But I think here we are, right? Like it's a big day. By the way, anybody who's kind of following along on the square shenanigans, holy moly, what a move. We up and we stuck. Yeah. Man. Oh yeah, there you go, Palo Alto. We had some huge trades on Penn. Side note, this is specifically Spiders DMing me in the chat too, in our survey. He's like, yo, what are we gonna do? I was like, don't worry. But yeah. Definitely a good deal. I mean, oh man, these boo emotes don't come through on this software. All good. Palo Alto, huge day. Square, huge day. IWM, what a moment IWM is having. And I think, that's kind of gets me to exactly what I want to talk about today. A lot of stuff over the weekend. Side note, I'm not gonna touch on the political aspect, but that's crazy. I can't believe that happened. But we'll see. This is from a market perspective. This is what the question is. Is this a broadening or is this rotation? And I think this is a very, very important point in the market, like a definite pivot point. We'll go through. I want to go through what the price action was that led us to this moment, in terms of SPY and the broader indices, and why this stuff might be going on. So, up to this point, I've been very bullish on the mega caps. And I think that, historically, statistically speaking, seasonally, that would actually say that this is still a bull season for mega caps. I don't know. Obviously, it's not a question of like, do you short these names? But when it comes to market broadening versus market rotation, this is crucial. So a market rotation, if you will, is when money's leaving one place and going to the other. Market broadening is like there was a lot of cash on the sidelines, and everything kind of pumps, where the laggards become the leaders, where the laggards become the leaders, and they're two different things. I don't know why we can't have both. Both would be the ideal situation. We just have like everything melts up. But at the same time, I think what we're going to run into here is that regardless of seasonality and the money downs, Ava, regardless of seasonality, it's an inflection point in the market where I don't think that the mega caps are the easy trade anymore. I'll just say that. The mega caps can still be a good trade. I'm not ready to short them. But I think, if it's broadening, if the market is actually broadening, what we will likely see is like the large mega caps, Qs and SPY kind of go sideways, or just not up as fast as IWM or KRE or XBI, specifically those sectors. That said, it can get really, really whippy, right? To me, this IWM small cap trade was definitively going to be a Q4 thing. Like, it's definitely a Q4 thing. Very similar to like where Bitcoin and crypto, definitively Q4 thing. It doesn't mean that it doesn't base out Q3 here now. And I think that that's what's likely to happen. At least it's to think that they're going to crack lows. That's pretty cray. Huh. Oh, I should have taken that trim on a Square. Oh well, that's a crazy move on Square. We'll get through a lot of this stuff. So that said, if you guys have tickers, go ahead, drop them in the chat. We'll take a look at them if we have time later on today. But let's get to it, right? So welcome again. If you're new to the channel, what we do here every Monday is kind of take a look at the market. What was important last week? Key data points from an economic perspective. Any major headlines? If you have some questions, feel free, drop them in the chat. We'll go ahead and go through them. And we kind of plan out the week, right? Where are we? What's important to watch, right? And are there any kind of like speed bumps in the road this week? And what's going on, right? So we did kick off earnings season last week, by the way. This week we have a little bit of a ramp up, but next week is the big week, right? So I mean that's a huge deal. In terms of data points from the economic perspective, what we got last week. So we got two things, CPI and PPI. If you don't know, if you're not familiar, CPI is basically consumer price index. That is more or less inflation, basically a what it is number. Very backward looking to me. It's not like, it's not my favorite indicator, but it is the market's favorite indicator. And we will see massive moves every time we get a CPI print, and we did see a massive move in the green. That is what this came in versus consensus, whether or not it was good or bad. So CPI month over month, that's like total inflation. Expectations are in parentheses, so 0.1% to the upside was expected. We actually got a down 0.1%, so that's like 2 basis points difference versus the prior of 0. So now we're going backwards on inflation. That leaves for, at least from a month over month perspective, that leaves year over year at 3% against the 3.1% expectation. And remember, markets move mostly on the difference between expectations and what they currently are, not necessarily what the prior was, but it's important to note the prior. So core CPI, they strip out a lot of important stuff there, coming in at 0.1% versus a 0.2 expectation. 3.3 landed for the year over year. So again, cooler than expected for sure. The initial market move was to the upside, and everything was to the upside. And if you look at it, and we will, the sussy type of price action, I typed this pretty much out of the gate when I saw it. It was like, okay, this looks like a little suspect. Qs, SPY were not really holding in the pre-market, but IWM, gold, things like that, those were. So, they held their gains the entire day, and still to this day. Qs and SPY, on the other hand, gave pretty much all of it back and then some. And that began this really, is it rotation or is it broadening? And so that's the question, right? Then the next day, PPI comes out. If you're not familiar with PPI, that's producer price index, essentially what the producer's inflation rate is. Had an expectation of 0.1%, coming in really hot at 0.2% month over month. Coming from 2.2 expectation for year over year, we landed at 2.6. So it's significantly hotter than expectations. Core PPI, again, doubling expectations. And then year over year landed at 2.6 versus 2.2. So this is important. PPI is a more of a leading indicator than CPI is, because the question is, do the producers, at that point, roll that down, and does that come down to the consumer end, right? Do the producers basically pass on those costs? Shalom. And so that's really what the market's kind of going to digest here, at least part of it. There were a ton of revisions to PPI also, so this was very cool for a significant period of time, and then they just freaking, I don't know what's going on with whoever does these numbers, but they revised away a lot of stuff on that. So that was a big deal. In general, inflation broadly cools, likely seeing sealing the deal for further rate cuts later on in the year. And the market actually priced that in pretty much fully. I didn't pull that graphic up, but I'll just tell you, if you go to CBOE, like Fed Watch tool, we're nearly 100%, like basically pricing in a September rate cut, and even like further than that. Let's go ahead and pull it up, just so we have it. But just go to your Google, right, and CBOE Fed Watch tool, and you'll get this CME Fed Watch tool, and you can just go into, get out of this, compare, right? And then, so September is the next rate cut. So now we're pricing out slightly. So they were at 90% probability of rate cut, and before we were 70%. But you can see the trend of how this is going. Now, someone's pricing in a 12 basis 12 13% of 100 basis point rate cut. That's crazy. And then you can go into November and look, we've actually already started another rate cut priced in for November at a 62% probability, and another one priced in for December. So they're already pricing in 3 rate cuts, like back to back to back. So that's the question. Is this legit or is this not? 4. Is that right? 4 rate cuts all the way up to January. Holy. Are they doing more? No. Okay. So they're stopping in January. They're going September, November, December, January. Holy moly, that's a lot. I don't know if that's right or wrong. I have no idea. But they're basically saying it's just odd and cracking from here. And so that becomes the rate story, right? So what stocks do best with lower rates, right? It's not that the mega caps need like lower rates to do better. They don't. But there are some stocks out there like your lenders. So specifically like KRE is the regional banks, but other specific lenders, we could probably even look at SoFi, believe it or not. Gang, what's up, man? We could probably even look at SoFi. Square is a big one, but any of these regional banks also, that becomes like this massive catalyst for that whole cohort, and also biotech stocks. So biotech is a big deal. They borrow a lot of money, but let's stick with profitable companies if we can. I'm not trying to go dumpster diving just yet, but profitable companies that borrow or have a lot of leverage, and are susceptible to very high like interest rates. Those are going to be the ones that are going to be your biggest, we call beta moves. So if you don't know, they're actually here. I'll take my Rivian trade if you guys aren't familiar with that. Rivian at $10, right? So Rivian at $10 is sitting almost hitting like right around 18 right now. Here's in a couple months, right? Stocks make the biggest moves when they go from bad to just okay. That's true, right? So right now, you can look for some situations where some stocks are priced as very distressed companies. Can I do sales? Yeah. Stocks that are priced at very distressed levels, but that might not be true, right? So if you have a fundamental case where, look, the market just has this story wrong, i.e. Tesla at 170, 180, Apple at 165, 170, Rivian at 10, the market just has the story wrong, and you have a fundamental case where, or Robinhood at 8, right? Palantir at 8 or 10, whatever it was, where, the story is not right. The price action does not support what's true. And those stocks go from bad to just okay. You're usually going to get a double. GE, by the way, is one of our like older trades at like 40 or $50, right? The move to 100, they double very quickly. So, but from there, they become kind of like these show me stories, which I believe Rivian is in. And we'll see how this goes from an IWM perspective. We'll likely see a lot of big pops, right? And so that becomes like this kind of give and take in the market. We have a lot of times we have like small caps go heavily, and then while that's happening, mega caps either stall or pull back, and then small caps come back down and mega caps go back up, right? And they just like a teeter-totter, right? Seesaw, whatever. Like, that's probably more along the lines of what I'm expecting here. But whether or not this is rotation, if this is legit rotation, we'll see mega caps just slowly grind lower from here, even though the seasonal trend is still to be long. I think we're very near the end of that anyways. Do I want to press it? I don't know. I've captured like 90% of that move. But if it is rotation, the mega caps will slowly grind lower regardless. So that's going to be the difference. And we'll see that in the charts as they play themselves out. In terms of other headlines, Powell's mentioning closer attention to the cooler job market. We're going to get some of this jobless claims later. That becomes kind of something that you want to start watching as jobless claims come in. The weaker, like the labor market looks, becomes better for this rate cut story. Right at this point, though, it looks pretty priced in. So we'll have to see, is the market overshooting to the upside? That's really the question. It always does, but has it gone too much, right? Prices for shelter, electricity, hospital, outpatient medical service, these are the areas where inflation is still very, very sticky. I put this like some stats here: year-over-year electricity inflation 4.5%, inpatient 4.5%, outpatient 7, almost 8%, healthcare services. So that's where inflation is still very sticky. So that's kind of where we'll have to see, does that start to come down? As I think about it, like there's some stocks like UNH, is still. Did UNH move? It looks like it's trying to. Oh yeah. Hello. I missed this UNH trade. I mean, from a trading perspective, sure, but we still have this investing. Oh, they have earnings coming tomorrow, so that's going to be a big one. So in terms of this healthcare stuff, what's UNH going to do, right? That's a big. Oh, have you guys seen this UNH chart? Holy, you might not have. That's like a big turnaround. Ugh. Wowzers. So we had these buys for sure, but this is a massive consolidation. I don't know if it's time yet. We'll see. This is like one of the best performing stocks out there, but this is like 3 years consolidation, gone nowhere. So if UNH does start to break out, guys, look out, because this is going to be wild. This is going to be a wild ride. Put it on watch for sure. This was like a next year trade, definitely. But does it start now? That's the question. You can start position. Yes, health got some. Yeah, definitely. Definitely healthcare. Definitely biotech's got a lot of love. Oh, look at this. Amazon got no love. Amazon got no love. So let's go ahead and move on really quick. I'm going to take this down. Sorry, we don't need to watch this. In terms of seasonal stuff, technically we are here, but like I said, this pullback typically happens late July, August into September. So it's a very small blip on the radar. The thing that I'm looking at right now is like, some of these pullbacks were so quick, like it might have happened already. So that's kind of the question, right? Is this it? And did we already live through it, or is there more to go? Because technically we're all still really high, towards the highs, but we'll see. In terms of what we have on deck, so here's what we have on the economic calendar, right? So today, a couple bill auctions. We got some New York manufacturing manufacturing index numbers, by the way. As we get more manufacturing data, I think it's only like Philly Fed that's actually been, of all the districts, been like ultra green, ultra positive. Everybody else has been pretty poor, so we'll see. Tuesday, I made Wednesday yellow. Tuesday with retail sales, not typically a market moving event. I would say this one might be a market moving event. It's very possible. We don't have a whole lot of stuff on the docket for the week, right? I'll say that's important to note, right? So when there's not a lot of gotchas or anything like that, we'll tend to just continue on in whatever direction we were going, which right now obviously to the upside. So this with not a lot of major data points on deck this week, pretty much all the eyes will start heading over to earnings, right? Which kicks off really heavy next week, not this week, but really heavy next week. And one thing is really important to note also, as we approach earnings season, things get a little choppy. So, we've made a lot of these pre-market moves or pre-earnings moves, and sometimes some of those get pulled back. Netflix looked like it was going to be good off the 20 days something average, but nope, she failed and she went straight to that 50. So, I think that's a perfect example of here's Netflix. As we run into earnings, we get this kind of like slow grind higher here, and then you get real close. Netflix earnings is this week, by the way, Thursday. Then you get this little bit of a profit taking, and then and that's probably it for now. But yeah, they do have earnings coming in on Thursday, so those kick off really the big tech earnings movers. Let me go and pull up my Twitter real quick and see who we have on deck. Honestly, I didn't even pull it. I'm just gonna grab earnings whispers. So what do they have? They have okay, so Goldman Sachs we got this morning. I didn't look at that. Bank of America tomorrow, UNH tomorrow. So no train on UNH. Let me see. So Thursday, Netflix, usually the first of the quote unquote tech companies. We got Delta last week, so we get some more airlines, UAL, Abbott, Intuitive. Some of these are coming hot. So not anything crazy. We get some oil names also at the end of this week. If you're trading SLB or Halliburton, just careful. We do have earnings on Friday, but and some home builders. So I think if there's been anything that's had a quick sell off, I think that might start to stabilize. Maybe small pops, but like I said, this is like kind of towards the end of that seasonal push. I'm like, the easy money I think is gone. So we'll see. Jeremy, UPS take profits this week. UPS looks good. It looks good. I just opened a UPS swing, but this is earnings next week, so I got some near dated stuff. Yeah, she as in like the UPS CEO basically said on one of her last appearances that, hey, it's not going to be a Q3, it's going to be a Q4 thing. But look at FedEx just extending today, right? Almost 52-week highs, not quite, but FedEx is a follow through, man. This is crazy. I think this could be a pairs trade. What if UPS does bad, FedEx continues to take from them? That's probably good. If UPS does good, it's probably also good for FedEx. That's a possible pairs trade in action. Interestingly enough. And so Wednesday we get this thing called the Beige book. If you don't know what the Beige book is, this is probably the most important Beige book of the year. Weird. So the Beige book, what it is, it's when all the Fed districts get together and they basically turn in their report of how their areas are doing. And so what happens is that the Fed gets I think it's 2 weeks to digest whatever these reports say. And then that's what they decide. That determines what they decide to do on this next FOMC meeting. And so this Beige book is really going to open up a small little window into what these Fed districts are really thinking. And are they like, oh, if they're saying like, oh, our labor markets are really strong. No. Okay, this IWM move has to pull back. So Wednesday becomes a big deal, right? If they're like, oh yeah, we're struggling, we have weak labor force, inflation is still kind of sticky, then they'll probably price in even more aggressive rate cuts, right? And so Wednesday becomes this under the radar pivot day. If you don't know what the Beige book is, this is probably the most important Beige book that we're gonna get. And this is going to determine really whether or not this is a broadening or rotation to me, right? Or at least the market's going to get that data. It might not be like a boom instant reaction, but everybody gets a couple weeks to digest this, right? And so we'll start getting these analyst calls out after this Beige book and start talking about it. And right around the same time, we get some Fed speeches. So we get, I think it's 2 or 3 Fed speeches on Wednesday itself. And we get 4 Fed speeches on Thursday, and then another 2. And so what happens is that the market gets their essentially quarterly business review, if you will, of their district, what they think, what they need from the Fed to help their areas, and then they start their messaging campaign to kind of keep the market in check. But that's the week so far. So for me, Wednesday, yet another pivot day. But overall, the market kind of like shifts to looking at earnings, right? So earnings, any catch-up trades, things like that. If you want to continue to play some of these mega caps, I saw someone ask about Amazon. So it's very clear, just so you know, Bezos filed that he's going to sell a boatload of shares. But the thing is, the dude has refused to sell a single share below $200. So he has become like this crazy wall at $200. And so, I saw him file. I didn't think he was going to start selling right away, but he did. And so that's what, even though we've gotten so many upgrades on Amazon, I think they're all legit, actually. Even though we got so many upgrades on Amazon, Bezos has decided to sell like 25 million shares or something crazy. And he's cashed out, I think, like 30% so far of what he's planned to sell. So, but he hasn't sold a single share below $200. So, this is one of those points where Amazon's going to push up against 200. The deeper pullback that you can get, the better. Powell today, right now. Powell's speaking right now. The deeper pullback, the better. And like if you can get it around 190, as close to 190 as you can, that's my guess. But it will very likely rebound once he stops selling. It's going to catch the wind, right? So that's kind of like a layup of the mega caps to me. The question is about timing. He's got to be done selling by earnings. So he's got to be done selling all his shares before earnings. So that comes this week and next week. So sometime after this week, not this week, maybe late next week, we'll probably see Amazon pop. And what it's going to look like, it's going to look like a day where Amazon opens above 200 and closes above 200. That day, you go. That day, you know that he's done selling. Because as far as it's concerned right now, he can sell like 10% of the daily volume. And he's likely going to push it under 200 at the close pretty much every time. But if you get to open above, you stay over 200 all day, and you close over 200, he's done, right? He cannot sell anymore. He's done selling. So that's what you want to look at. So might not need to wait till Wednesday for Beige book. I mean, it's not many people understand the Beige book. I'll just tell you that, right? Beige book is specifically to traders. It's kind of like this under the radar thing that, like, I'll just say, like, most people don't understand what it is, or even that it exists and that it's even a thing. But for me to you guys, it's a thing. It takes a little bit for the market to digest that data. It's a big giant report. Imagine all the districts full sending in their specific regions reports. Like, that's what it is. It takes a while to go through all that data. But again, and then we get all that talk, right? So that's what we have on deck. I do have Miss Cleo knocking on my shoulder. So let's go ahead, get over to your favorite part of the broadcast. Let's check in with Miss Cleo. Here we go. All right, guys. So this is kind of it's for fun. Let's just ingest, but it's insane how accurate she is, or he is. I don't know, whatever you want to do on this section. So last week, by the way, she crushed it. She called all of it, right? And the week before, she called every single move. She called like, oh, we're gonna open at the highs and we're gonna give it all back. They call it the tower. I see another tower this week. So this was the CPI day last week. She gave us this tower card. That is, we've built something so high, but it needs to come crashing down. So just beware. That's tomorrow. But for now, let's go ahead. So this is the theme card of the week. Then every day down here you have, you have every day's kind of like the card for that day: Monday, Tuesday, Wednesday, Thursday, Friday. Queen of Pentacles. So we're going, I don't know, a wands. Then we have the tower. Then we have 10 of Pentacles, Knight, Queen. I play poker, so this is up, up, up. But we'll see what she calls this. If she says this is going backwards or forwards, I think that's going to be important. So anyways, so into the theme card. So theme card is here. 6 of Pentacles. So 10 of Swords last week brought us final death, perhaps for the Bears. Yeah, it was the final death blow for the Bears last week. That's true. The 6 is a move in the other direction. Oh, wait, but that doesn't mean we have to fully retrace. So she's saying backwards. I'll show you guys what the setup looks like right now. If you don't know what broadening formations are, you want to start figuring that out. I'll walk through it a little bit. But that doesn't mean we have to fully retrace. We'll be in a position to give and receive charity, which means we'll experience both highs and lows fade. So she's saying another outside week. If you don't know, last week was what we call an outside week. We broke the lows and the highs of the prior week. She's calling for another outside week. That's what I read, and I think that's possible actually. So this is firmly day trade mode engaged, specifically for the large caps for me. Monday is 9 of Wands. We're getting fatigued from battle after battle. Fair enough. But the worst is behind us, and now we just need to survive the day. Okay, this card usually indicates a topping or bottoming type of action that sets up for a bigger move. We may spend a lot of time chopping as a result. We've continued to break out, but we're running out of steam. If today is weak, tomorrow's likely is as well, setting up for charity. I don't understand these words. If we remain near the highs, the tower could be an interesting setup for a trend day the following day. So this is that day I was telling you. So Tuesday is the tower. We know the deal by now. We had this card last week, and it gave us a perfect example of how it works. Wild rally Wednesday that was completely sold off on Thursday, actually in the pre-market. Then, of course, we resolved our issue and bounced right back on Friday. And again, this is the outside day kind of setup. If the card follows a rally, then it usually indicates violence in the form of big red candles. So if it's big green, big red following. Otherwise, it can inspire a big move higher before it sells off, or it's like a press up and then we start to fall back behind it. Regardless, I'd say this is not a swing day. Don't chase rallies. If we see one, use it as a chance to get out rather than dive in. Fair enough. That's her. Whenever she calls this card, I don't understand like what the deal is or like what kind of psychic shenanigans is going on. It's crazy. So anyways, Wednesday, 10 of Pentacles. We're reaping the rewards of our hard work and financial efforts. This could be a finisher on Monday's 9, as it tends to follow the same pattern. If the tower collapsed, then we're building a base and stabilizing here. If the tower rallied, then this marks the local top. Fair enough. Again, go back to the theme card. So Wednesday, Thursday, day trade days, no swinging. That's what she's saying. Go back to the theme card. We fade the early weak energy, and Wednesday can bring pivots. We just said that. So keep an eye out for one here. Fair enough. Thursday, Knight of Pentacles. This guy is a slow mover. Chop day. He does a lot of hard work in the process. He rarely brings a trend day. Okay. Take Thursday off. It's usually more of a slow grind up or down. Look for a slow build in the morning and a stronger move in the afternoon. This looks like one of those days where people may get stuck chasing an early move only to watch their profits chop away into the close. Night following 10 says continuation. Oh, okay, so she does continuation from Wednesday, so expect the same type of energy. And then a Queen of Pentacles to close off for the week. Pretty interesting. We have a 10, Knight, and Queen. Queen comes after Knight, which means our 10 wasn't as much as a finisher as we thought. Okay. We haven't seen a lot of this card in stock readings, so we can't really rely on historical data for clues. I'm going back to the theme card. We should go back to Wednesday. If Wednesday set up some strength, then we just do more of the same here. If Wednesday was strong, then Friday's strong. If it sets up a top and force the Knight lower, then the Queen keeps us moving in that direction. Okay, so Friday will be the same as Wednesday, is what she's saying. All right. She's not a huge energy gal. She's more of a facilitator than a doer. So again, I'm not expecting much energy. Recap. We have groupings this week with Monday, Tuesday showing struggles and Wednesday through Friday showing growth. However, we'll still follow the theme card and look for a mean reversion midweek, regardless of how the cards may appear. Okay. So she's saying Monday, Tuesday, possible rally. Let's get over the charts really quick, and that's what I want to do. I'm gonna go ahead and take this down. We don't need that anymore. So really quick. So what I have here on my screen is just a basic 30-minute chart of a lot of the main things that I'm watching right now. So top 4 of the major market indices. So SPY, Qs, Diamonds, IWM. And let's go ahead and zoom in with the 30-minute on a 30-minute candle. Orange box here. This is the average week's range. By the way, this is how accurate this stuff is. This was Monday. An average week puts us to, and we said it last week, puts us at 563.78. We said buy dips around here. You got it once, twice, boom, boom, at an average move. Expecting anything more than an average week's move is just statistically improbable. So we don't tend to see that. What I'll say here is if we continue, let's say this is the lows of the week, an average week's, and mark this, right? An average week's range to the upside on SPY is 570 spot 80. So anywhere around 570, that's likely the top, right? If this is the top today, an average week's move to the downside, and this is where it's really interesting, is just where we were last week. So is it possible to do both in a single week? It is. So we just want to be, I'm going to go ahead and do something I don't usually do, but so these are these kind of like topping formation from last week. And what we'll start to see is you start to see this really like broadening formation. Can you see it now? So this is what we call a broadening formation. And this is like your quote unquote megaphone. On a daily perspective, I say perspective candles. That means that this is your first day. And the second day you make a new low and a new high. That we call an outside day. The following day we almost made a new low. But how we trade this, and if you're in our group, whenever you see this situation, a new high and a new low, you stop, right? You stop and you don't expect much. You don't swing short. If you have longs open, you don't panic close at all, right? Because the probability that we retrace at least 50% of that prior day, the very following day, is extremely high. And that's exactly what we did. Actually, in SPY, we did a full day. And so as you trade this, if you extend beyond 6.5, 6.8, that golden pocket that's right here, if you extend beyond this, the probability of actually making a new high, again, very high. That's exactly what we did. From here, though, you have to connect these tops. So you have this topping formation right now. And this is kind of like that broadening formation. And really, you just start to look at like, it's just chop, to be fair. It's not really fun to trade in these situations. But what you know is that there's no trend. There's no trend here. And you really like your better buys are actually down here when you just slightly breach the lows. I think what Miss Cleo is kind of like calling for is this, right? And then getting this situation, guys, I'm just going to tell you right now, very typical. That would not be abnormal. That would be totally normal to see this kind of price action actually happen. So at Friday's close, did we say it was a swing long? No, it wasn't a swing long, right? Did I think this was a gap up? Not when we were closing up here. I was thinking we would get this move tomorrow or today. And we may get it, right? And the reason I took that short trade was at this 560s level. If we do start closing below this, yeah, we can actually think about retracing this. But you only really trade this level to level, which is just barely in this kind of mid-range, because this could be the only pullback that we get also. So just be very cautious. There's a session gap here. That's really what I would be looking for if we fill that. And, it's still bullish, honestly. Net, as long as we're closing over this larger volume shelf here, we can just start to build like that base on SPY. But this puts us in a situation where it's really TBD in terms of the larger trade, unless we're outside of this making new highs. Like if we're making new highs, that's fine. But this becomes very choppy, trendless type trade for this week. So, my gut is that we probably close somewhere near where we open at the end of this whole thing, right? If we go all the way up, it could be up there, but we could very easily pull back and retest this weekly highs. But again, 570 max upside, 555 max downside for SPY. Got it? Lock it in. Same thing's true here on Qs. This is Monday, right? Average weekly range puts us to 505. What did we get? Basically got right there. And this is that same kind of situation. What's this from? Oh, these are extensions. So this is the same kind of situation, but a little different, right? If the highs today were here, then downside puts us at 490 one more time to retest that low. I think that's possible. Dare say probable. We'll see. And then we have the same kind of like broadening formation. So the upside's like heavy, right? I take this on the daily. This one I don't think is quite as clear. Yeah, so you'd have to have pre-market levels on, but broke the highs in the pre-market, closed at the lows. But again, you retrace half of this like 9 out of 10 times. So you never swing long on a day that has an outside move. You know, where do we go? Right there, like 6.5% here. And we got nearly all of it from this morning. So I think Qs are doing the same thing that SPY did. Just so you know what this looks like there's a lot of situations. Here's another one. Here's an outside day. It's not really till you get this extension here, and then they'll typically pull up. But when you have this day, it's like, oh, okay, we're probably going to go sideways for 1, 2, 3, 4, 5, 6, 7, 8 days. Plus, we've had a big move off the lows. Here's another one, right? So even this, it's a quick burst downside, big outside day. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. We're right back to that low. This day, when you have this kind of situation, here's perfect, right? Big outside day, right in here, right? This is the typical setup, then the typical reaction, exactly right there. We have nothingness but chop for like a week, and then you make another move. So that's very likely right here. Again, outside day, nothingness but chop. You could, if you swung low, like short on this day, oh, you were so screwed, like so screwed. So we never swing short or long after an outside day. It's always the following days. Even here, outside day, nothing really holds. It's choppy, super choppy. And how many times do you retest that same level? It's not until you get that break full open and close below that same day's low or high that you get a move. 1, 2, 3. So hopefully this makes sense to you guys. If you're learning technical analysis, this is the deal. Outside day means trend pause instantly. So selling calls is the deal, right? That's your best play right now. SMCI, you guys are asking a lot about SMCI. I've not covered yet. I will take that one first. So dollar coming down, just going to take another quick look, 30-minute chart. So dollar, this is important right now, I think, for a lot of the small cap name type trades. Dollar coming down below its 200 day. This is significant. We want to see that continued trend. 10-year, TNX is a 10-year yield. Again, trending down. Are the highs in? Sure looks like it. So these are best case scenarios. The dollar coming down, ideal for gold. This was kind of like the setup right now. We're looking pretty bullish, just so you know. What do they call it? What's this? It's like the inverse of them. I don't know. Looks ready, man. Gold looks ready. So not super fun, like exciting stock, but I'll just tell you GDX, GDXU, that kind of stuff. That's where you get the beta. Oh yeah. This looks ripe and ready to roll. Just gonna say. So I would keep the gold and the gold miners, maybe silver miners. Did you guys look at silver today? Maybe silver miners on watch. This week, silver looks like it already had a little bit of a run, so maybe gold. I'll probably do gold. And VIX is completely irrelevant. So, one thing to say, this is IWM, and this is completely different than SPY, right? This is a totally different setup here. This is a massive deal, right? So we're here, 240 is like the upside targets for all-time highs on IWM. Yeah, I know a lot of arguments here. It's a crap index, blah 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 blah. But they just did the IWM rebalance, so a lot of things are changing here in the dynamics of this setup. But near term, to look, if this is the moment that Tom Lee's been waiting for, and I'm just gonna put this out there. Take it for what it is. I'm looking 270s. Looking 270s, possibly 285s. First stop has got to be this 240 level. You have massive overhead resistance, and this is like a longer term trade. Oops. But the setup here, first target 223, then 240, just under 240, and then an extension of this multi-year consolidation, which at the end of the day was just a retest of these highs. would bring us to 270 plus. So yeah, this is like a year out, but just so you know, that's what that looks like, because that's a weekly chart. So you got to, take it with a large time view. Okay, so you guys want to take a look at some stocks. Let's go ahead and do that. I'm going to open up this multi-time frame view in a different window. SMCI, everybody's asking about SMCI. Okay, we'll take a look at SMCI. So SMCI on the weekly, this is the first time frame. So weekly consolidation break 2 weeks ago, not today, not last week, but the week before. That was your breakout here, right? It confirmed here. Now you have earnings. So this is looking like a lot of that pre-earnings run up, and then we'll see. Weekly looks like squeezy on that time frame. Daily, so you're running into this, right? A lot of overhead resistance right in here. To expect it to just rip through, I don't know. I'm not an SMCI fanboy, I'll tell you that much. But these dips in this area right in here are probably more likely to hold. And this was that one. This is however many days ago. Made a lot of the move right there. Sometimes if you get this pullback to retest these lows, that's like a big long. But what I'll say here is, unless this is continuing over 978, it's not going, right? So what I would say is 978, and I'm only going to look at a swing from a swing perspective right now, because we're not talking about day trading on a weekly trade plan. It has nothing to do with that. Unless you get like a daily close over, what is this, 952? If you get a daily close over 952, then you can think continuation. Until then, this is a little choppy. It's still in the box, man. It's still definitively in the box. Can I look at it on a smaller time frame? Here. So I have the same kind of thing. So from this move, you have kind of like this liquidity up to 980. Yeah, you need a full day's close over that 950 for sure. Here, 968. This is either buy a bunch of time. I'm not a SNCI fan, to be fair with you guys. I'm to say, or you look for this. This is broadening, right? Or you look for this level, 850s to 860s to act as support, right? Off this 20 and 50 day. What's good for you bulls is that, these SMAs, simple moving averages, these daily simple moving averages are widening. So this does look like it's getting set up ready for a pretty nice move. Continuation. This looks like continuation. As long as this is holding the 20-day simple moving average, I think this is like you should be targeting upside on this. So this could be a dip to buy. This looks like we just filled a nice little fair value from yesterday or Friday right in here. So this big candle we call a fair value, basically imbalance in the market. This is now filled. So I'd say you never want to do exactly at support. I'd say over 870, 860s, 865, you're good to continue on to the upside. Stay bullish. Okay. So let's see. We have been stuck. Okay, couple requests on Celsius. So Celsius, okay. So Celsius rejected that 20-day simple moving average. This looks oogly. It's not in a spot where they don't need to borrow a lot of money. They're in the staples sector. So like inflation and producer inflation does hit them a lot. But that said, you're running right into this kind of order block. And I will say this is where I was buying last time, like right here into this level. So right now, it looks good for a shot as long as it was holding the 20-day. It's not. That's like failing in force right now. I don't know. Was there a headline on Celsius? If there was, you guys let me know in chat. But this looks sketchy. It looks like it's going to flush, and this looks to me like it's going to give a liquidity grab. I don't know that it flushes all the way through here. So for now, this is going to happen, but you could easily see one of those ding, 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 right? So like couple bucks. I had 47.50 as like that. Okay, we start to buy. You have there is a very teeny tiny. We're gonna grab this. Boink. Session gap. 47.97. Do you see that? You might not see that. This is coming from a earnings report. This was filled technically right here. 47.97. You got to continue to close over that. If you don't, I say close, daily close. If you don't, then you can see 42s and you could see 35s. But this whole situation is about, the Pepsi deal, distribution deal. I like Celsius, man. I don't know what to tell you. I got some, what did I buy? For any of you guys that don't know the best Celsius flavor, it's this Cosmic Vibe. Where is it? There it is. That's the Celsius flavor to get. But anyways, enough of Celsius. I think this comes into this level. Sub 50, as close to 50 as you can. I think that's liquidity grabs. I'm not leaving. I trimmed a bunch, but now this is kind of like from a stock perspective where I would like to buy it. And if I like it at $50, I love it at 35. But this is not like a short-term trade for me. I'll just say that. There's something we said about this double top. Let's go ahead and talk about it. So this is the double top here. This is how these work. Here's your level. Okay, could not breach this. So if it cannot breach this, it means that it might need to go below here to get back above here. But how you trade this and what this looks like from a technical perspective is that, I need to do this reverse. Here, and this is going to line up pretty much exactly. You have a measured move of this consolidation high, and you really just like duplicate it. So here's your consolidation high. If I duplicate it, maximum is that 200 week simple moving average. Maximum, that puts us at 35. What I just say, I did say 35. That's the session gap right here. So I like it sub 50. I love it at 35. This is not a short-term trade, but that would line up with the 200 week simple moving average. It's possible, guys. It is possible. So let's just not, it is what it is. So if you're long, that's cool. There's not like a whole lot of reason to sell here unless you have a fundamental case that I do not. And I would just be a smaller position at this point with the ability and willingness to buy lower if you get it. But yeah, that's how I would do Celsius. Okay, so I think we talked about Amazon. We did. It's very much a Bezos situation. Fell right out of the channel. So we were looking for this channel to hold. Not happening. That line right there. Oh yeah, that's Bezos all day long. Tomorrow, Amazon Prime Day kicks off. So what I expect to see happen right here is I expect to see Amazon come in, retest this prior breakout level right now. And then I expect people to start buying this up regardless of whatever Bezos does, because it's probably going right back, right? So dip buys around 190, as close to 190 or below 190 if you can. That's me in a nutshell, all day long. This is a temporary condition. Bezos is not going to be selling shares forever. I would not, from a short-term perspective, not worry about it at all. This is like longer-term view. But you lose the 20, you likely go to 50. That's at 188, 187. And then you start buying the dip. That's me. I bought UNH ahead of earnings. Yeah, no, this is definitely moving. UPS take profits this week. So UPS, let's go. We talked about this. This is a massive move. Off the bottom, off the lows here. We got earnings coming up, not this week, but next week. That's good. So this is that last pre-year earnings run. Look, it didn't make the move beforehand. Max upside target, we're looking at 147 for this kind of like fair value gap, just to get it right back into this area, somewhere around the 200-day simple moving average. So this setup, if you don't know, always a good setup. We could take a look at some others that are happening right now. But whenever you have these kind of things happening and you reclaim a 20-day simple moving average, which is what I thought Celsius was going to do this day, she failed it. But the juice is worth the squeeze to take the shot regardless, because you can get this kind of a power move. But 147, give or take, is going to be my upside targets near term ahead of earnings on UPS. So you got a couple more bucks to squeeze out of this bad boy. And again, we saw FedEx, right? Like that's what they're going to start anticipating. AEHR. I think this is a under the radar AI type play, right? So they got to deal with AMD. They got to deal with Tesla long ago. You know what? Come join us. Follow me. Come to our Monday night spaces where we do like a weekly stock picking event. And the crews, because there are other people that follow this much closer than me that are very, very close to air test systems. So you'll get some more DD on that. We talked about, gold, GDX, silver. Yeah, I like all of this. As long as dollar's coming down, I like all this. Missy's asking for a Tessie. So Tessie, big outside day right here, right? What do we say? It doesn't matter if it's index or an individual stock. You have an outside day move, meaning you break the high, you break the low. You expect what? You expect chop. I do not expect Tesla to break out here. I mean, this could be like a political thing. I said I wouldn't get into it, but I think like the Trump situation, Elon backing Trump, that's good for Tesla specifically. Trump gets elected, Republicans are at the helm. It's not the greatest for EVs overall, so we see Rivian pulling back a little bit. But for Tesla, yeah, we're good to go. Republicans getting elected is not good for like solar sector or any of that kind of stuff at all, right? The energy trade. Democrats come in, it's really good for I don't know, like plug, fuel cell, all that kind of stuff. It gets a little crazy. Sorry, my mic is all over the place right now. But I think this is it for Tessie. I wouldn't push this bet. Quite frankly, I'd sell some covered calls on this one right about meow. So that's what I'd be looking for. Although it's Tesla, right? She can go all over the place. Just make sure you sell calls. If you're selling upside cover calls, expect do it at a level you're willing to be called away. Like if you're not willing to get called away at 270, okay, well maybe you could cover them if it goes any higher, and maybe you go sell some 300 cover calls post earnings, right? But coming into earnings, I don't think Tesla moves at all. I think Tesla is going to be in the same spot that it is after earnings. That's my hot take on Tessie. I think the Momo, after pushing the Robotaxi day, the momentum is out. If Tesla takes a dip on earnings, I think you buy that dip, because Robotaxi event is still here, still coming. It's just not coming at the time that we thought. But if you get a dip on Tesla, I think that dip gets bought very quickly, because this moves so fast. There's a lot of people that were not ready for that kind of situation. As an aside, I did post on my Twitter feed, my X feed, that like if we came back in, where did I think that it would be a good place to buy the dip? It was exactly there, that 230 level. Boom. So connecting these recent highs, pull back. This is a proper retest of a broken downtrend. So I think this is good, but I think it needs to breathe for a bit, right? So this is what I would like to see on like an SMCI. That is a proper retest. You don't get much better than that. In the I think it was pre-market, from the break here to the pullback was almost exactly, yeah, look at that. From this breakout, which is actually, this breakout is really, let's call it here. That yellow line, 234.56, is exactly 50% of that breakout level to the highs. So that is a proper retest, lining up to the 200-week simple moving average, the purple line on my chart, lining up to a retest of that broken downtrend. That is a proper retest. All she needs to do here is hold, right? Just hold. Otherwise, like in this area, it gets a little bit choppy. If you get a pop on earnings to like the 300s, I think that's a sell point near term. And that becomes like, for a trade, that becomes like a point where we need to pull back a little bit, build a new base ahead of Robotaxi day. But yeah, net bullish, right? If you're investing, I don't care, right? But this is all trading stuff for sure. So yeah, I think what happens is you follow the cues. This is almost exactly the same setup. You're not breaching a new high. It's not going to be until you're over 271.25 that you are definitively making new highs. But at that point, remember what we did here is you got to know that you have this kind of broadening formation set up, and any liquidity grabs below at the edges. So you play the edges of what we call this broadening formation, or like old school megaphone. This is the setup. It's choppy, trendless trade. It is day trade mode, engaged. It's not swing trade mode. It's very difficult. You're not going to get a trend that lasts more than a day or two in that setup. You're just not. So just know when to like lean into a trend and when not to. This is when not to. All right. So last one, oils. Oh, and you got Meta. Oh, you do a couple more. All right. Oils actually, CL look good as a bounce. So we're right back into retesting this kind of supply zone. Is this ready? I don't know. I think there's a little market manipulation happening with the SPR. So that's definitive, just so you know. I think they're lining up as like dip buys. Oh yeah, CVX was the laggard here. Oh yeah. So oil stocks are actually doing good. Again, another proper retest of a broken downtrend for CVX. Here you go with the continuation. CVX looks better. It's like squeezy on the week. Big move on the day ahead of earnings August 2nd. So oil stocks look good. Maybe not oil specifically. I think there's some market manipulation going on there, which it seems like the market might be aware of. I like the peach flavor. Oh, is that Celsius? Okay, nice. Meta, Stark Investing. So Meta, I actually added to a meta swing today. I want to see this like, oops, this is here. This channel reclaim. So I had actually opened swings, not yesterday, but Thursday at the low. I opened up really red, and I'm like, nope, not going to close this. So here's the other version of that outside candle, right? Is if you get that continuation the following day immediately, I definitely don't continue on in that direction unless we're closing below that 493. For now, this is kind of like that liquidity area. So this is a lot of buyers supply in here. If it's closing below 494, look, we're going to take a leg lower, and we're probably going to get to that 476 and retest this lower down, like lower liquidity. So I'll close there. But for now, what I really want to see is I really want to see a close over this downtrend. So this is, let me get this. Yeah. Sorry, I got to try and lock this in there. Okay. So that's the trend that I'm looking at, these two recent lows. As long as she can close over, Meta, almost over 505. If we get a close over 505, like on the daily, 508. Okay, let's give it to 508. It's off and cracking, right? But for now, this looks like it might be a bit of a choppy setup. I do not have this week's contracts. I have next week's. So I'll give it a little bit. But we're kind of like firmly in this chop zone now. So I think this is, again, default to liquidity grabs, but not press super hard bets. I want to see this close towards the highs today for this trade. If she doesn't close the highs towards the close the highs if she doesn't close towards the highs today, I'm really going to put it on like, do I start closing out some of this stuff? But today is the shot that I take. Again, as long as we're closing in this kind of like green, like I want to see this closing here. Anything in up here, that would be absolutely ideal. And then I definitely think continuation. But for now, no, I'm not thinking downside unless we're breaking yesterday's or Friday's lows. Definitely not. Staying put. Meta. Winter Soldier. J-Roy. Yeah, Bucky. Let's take a look. Bucky. So this is that setup over the 200. This is a weekly view. but the yellow and blue, yellow is daily SMA and blue is a daily 50 SMA. This looks decent for a bounce. It has come into this liquidity zone multiple times, so it was worth the shot. And I didn't take the first shot, but Friday it closed over. So as long as we're holding, again, 20-day simple moving average, which we are, I'm going to stay the course, right? So right now, this is kind of like sitting here right there, 133.59. So this is all just like a retest to me. Even as low as here, this could all just be a retest. Anything in here. So a stop for me wouldn't be, I don't have July. I have August contracts. So I'm okay here. I think we still end up getting a pre-earnings run up. But as long as you're really holding that 20-day simple moving average and we're not having a rejection like Celsius's rejection, this looks at least good. Like these SMAs are actually getting tighter. So in here, so getting tighter, ready for a squeeze to the upside. We already saw what that kind of setup looks like, but you reclaim this, you could get this kind of chop, 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 boom. But near term 150 for the pre-earnings run. So I am in August 150s for Bucky, the Winter Soldier. We used to call Snow the Winter Soldier. And if you don't know, the Winter Soldier's real name was Bucky. And Bucky had to go back to Wakanda to get some upgrades. So once the Winter Soldier was not the Winter Soldier, his name was Bucky. So we now call him Bucky Snowflake. You guys, BTC. Yo, way. Okay, so Bitcoin. Okay. So by the way, I haven't written a newsletter in a while, but my newsletter on the halving said this is a dip buy area. We're reclaiming the 200 in strong form. Bitcoin has always been a political situation. The more likely that it is that Trump is president, the better that this trade becomes, and the more velocity that it does, and that's what you're seeing right now. So, for now, you're getting up into this level, 69,000, 2021 all-time highs. Just know that's going to be massive resistance. You're going to run into overhead resistance right now. We posted this in our group, in our chat, on my Twitter feed, my X feed, right here. This was like a dip buy, but it really needed to start holding over this level. I got Ethereum. I'm more like into Ethereum now than I am Bitcoin, which, by the way, this buy, come on now, is up 20%. What's the Bitcoin buy? Now you might see now. Ready for it? 15%. Oh, I messed that up. You're real close. There goes. They're both good. I'm more into Ethereum than I am to Bitcoin at this level. But anyways, there you have it. So this is gonna probably coincide with your coin and MicroStrat, all of the above. I think coin, you could take this and now play into here with these highs. So you got a little bit more 250s on coin, then you're gonna hit some resistance for sure. This is out. But yeah, you got a massive gap day. This is probably, this is this weekend. Good luck. I don't know. That's run quite a bit. Everybody like bailing on their Connell. I'm like, yeah, man, just chill. It's 250s for sure. So that was Bitcoin and Coinbase. And a couple. So AMD had a big move. You're pretty much at my targets. You're right here, guys. So you're right here at a massive level. Expect this volume shelf to get tested at 176. This is done, right? This is done. This becomes a situation, which is done. What do we need to do? This is a tough one. AMD, now you're pretty much at targets, my targets. AMD has this play. It's the client refresh, laptop refresh play. So all-time high to this 140 swing low. You're sitting at 50% right here. If you're going to be a good bear or a good bull, you got to know where the bears are going to step in. And that's exactly where they just stepped in. So 181, that's 50% from that 52-week high to the 52-week low right there. If you get an extension, it's got to be over 184, call it 185. If you're not trading over 185, do not expect this to continue running, right? And if it does, you go to like 197 in the 200s. That's where it's going to go. But for now, you got to look at a possible retracement. So that's going to be from here to here. And likely, yeah. So this is going to all line up. Probably a deep retracement into this liquidity area. 176 is, yeah, right in here. 175. So expect that to back and fill a little bit. So stocks are either running or resting. This is made a run. Let it rest. I would not, unless you're seeing it over 185, I wouldn't really press that bet. Or you see it below 176, then okay. You guys, yeah, hi, JMI. I mean, this is just gone. I don't know if you're. Some of our friends have been in this since like the threes. This is Amazon Africa. I don't think this is really chartable, my friend. To be fair, you're at the 200-week simple moving average. This one gets squeezy in its own right, like maximum target 1831. But you're just gonna have to daily hold this over 12. So cannot look at anything under a daily chart on JMIA. You're right at the 200-week simple moving average. Put you up 1250. So you must continue to hold 1250. You lose 1250, she gone. But you should be up like 300-400% from the lows, most likely. I'm not doing Chewy. Chart's broken. Talk to the chosen one about that. Is this new? No. I do this every Monday. Where you been? Okay. UPST. So when we talked about rotation versus broadening, and we said specifically the lenders, right? This is Upstart. This is Affirm. Shit goes to me, but the market doesn't care. Overvalued, whatever. The market's not going to care. Price action don't care about the fundamentals. That's true. The price action will tell you what's happening before the fundamentals typically give you a headline. But yeah, this is just continuing. If you get, it's tough because I think these are like kind of like known shit goes. I call them shit goes. You got earnings on deck. These are day trades. I don't know about swing tradings. August 6th. As long as you're closing over this could get real squeezy. When I say squeezy, look at this. So here's this last level. I'm going to call it right here. This is 30, spot 43. You have a pretty heavy volume, low volume pocket from earnings to be filled right in here to 33.90. That's a quick fill, like within a single session fill. You could target that up to 35, and then not until it's over that do you go level to level, right? So that's how you really want to do this, like one little chunk at a time. If you want to go for the whole chunk, go for it, right? But by a boatload of time. And the whole chunk is like 47, and like I don't know, this thing was like $400, you guys. 59. The whole chunk is 59. I don't know. That's what it is. But it's 59.51. There she is in all her glory. You want to look at Affirm if you don't. Yeah, there's your catch up. I mean, Affirm's much better spot than Upstart. Hello, Affirm. That's a channel break so far. Super tight, simple moving average. I'd much rather Affirm over Upstart today, here now. Why are you guys all about Upstart, not Affirm? What's up with that? Am I missing something? Do I think mega caps are overvalued? Just general question. Nah, I think they're fairly valued. You're not getting a discount, that's for sure. There are certain things in the market that you are getting a discount, and those are going to run a little bit more. I think that the mega caps are fairly valued. There is no discount to be had, except for maybe Amazon. But you know, the market. I think the average market multiple right now is like 25 something, and a lot of these mega caps are sitting at like 35. Nvidia's sitting around 75 PE. Like, you know, certain things deserve that extra P, right? Extra multiple. So I don't worry too much. Look, this is not anything like .com era. In the .com boom, multiples were over 100. Like the PEs were well over 100. Half the companies were not making any money. We're not talking about companies that are like not like super dead, most of them, unless you're talking about what I said, shit goes. But you know, a lot of these mega caps are literally printing cash, like printing cash. It's the companies like Affirm and stuff. If you get this over 100 PE, yeah. All right, that's no good. But yeah, Matt, this is exactly, it's at 35. It would suck, right? But again, it's you know, if I like it at 50, I love it at 35. That's all I say. So we did, rewind a little bit on for CELH for sure. Amazon 190 in play. Yeah, you know, it's possible. Duke did take the 190 puts, so we'll see, right? This looks like, because like the market just figured it out. The market said, look, Bezos is not letting this stupid stock break out. It's not happening. Bezos is not letting it happen. He's just and they get frustrated. The traders get frustrated. They're like, why am I trying to push the stock? Like, why am I trying to ride this higher when I know it's not, right? So they'll give up. It'll come back down to 180, 190. That's fine. We get these prime day numbers out. And it is what it is. But as close to 190 or below as you can, cool. But yeah, I think at that point she starts to get bought up for sure. But and I think she closes out, you know, in a couple weeks over 200. But you know, it's blame Bezos. That's what it is. Cool. Frankie, yeah, Netflix earnings Thursday. Netflix usually straddle, like buy long call and long put. All right, I'm gonna give you guys a couple that you didn't ask about. So Target, number one, I think it's a retrigger long. One more time. So these are like laggards. So 20-day up. These are really, really tight, simple moving averages. This to me is like way long. But this is an example of where the laggard could become like where the laggards, Target versus Walmart. Target, laggard. If the laggard becomes the leader, from the bottom here is well over 200. But near term, you're looking like the 170s, 175s. As long as you're holding the 50-day simple moving average now, that's ideal. And again, these SMAs very tight, very coiled, very ready, ripe and ready for a run. Ahead of earnings, we got a dividend way later. When is earnings? Earnings is not till August 14th. So I think that's ripe and ready for a pre-earnings possible run. Remember, retail data is out later on this week. And then what else did I talk about? What else do I have? Target, Square. Yeah. So I don't know how many times I said Square. I thought this one was like undervalued, but this is again ultra tight, right? Ready to rip. This could have been a leap at this point with this consolidation. Could have been whatever you want. A leap, near term, short term, long term, whatever. All of that was ready to roll in this massive equity, massive consolidation here. I don't think this is done. I have to like 80 in the near term on this thing. This is nasty. And again, when we're talking about the lenders, that's this. There's Cash App, there's Bitcoin, there's all kinds of stuff. I think this can get some legs. I'd much rather Square over Upstart. I'd even rather Square over Affirm for a whole host of reasons. But, you know, I think this near term, it's got room to like 70 something. We're at that first target right now. Big day today. This is just beautiful. And then possible continuation up into these 80 levels right here. So if it continues, that's going to be nasty. Just saying, this is still nasty. And then what else were we looking at? Palo Alto. Palo Alto we put out on the watch earlier on my X feed. So here we are. Last one. So broken downtrend, pop. This one was the one that was looking sketchy this morning, but we made it. Actually looking decent for continuation. So again, nice pullback, nice pop, nice pullback, retest here. As long as it's holding, I think we're good, man. As long as we're holding this shelf right here, this looks like ready to rip for continuation, man. Just gonna say it. So continuation on this brings it to like 360s. What all I'm going to do is I'm going to take this consolidation area here, just be out, your principal. So it's free to make it as much of a free trade from here as you can. And that's targeting right in here, 350s, 360s, right in this level. And then we do have like a massive volume peak pocket that I know a lot. So on Friday, I saw a lot of 360 flow. Wild, right? So 360s is this level right here to fill this massive earnings gap. See it right here on the right-hand side. So over 347.80, 348, a close over 348, we know it's happening for sure. But for now, it looks like it's chugging along. I'm going to keep it. There she is in all her glory. Did you know that gap was there? Because it's massive. We'll see. All right, guys. That's it for now. Oh, Del, you guys are... All right, I'll hit you up or over. I don't want to go too much over. So what? For now, just go ahead and follow me. This, right? Boom. Papergains.com/links. We are open if you guys want to hop in, join the crew. We do have some earnings trades too, by the way, which we'll start getting into later on. Probably next week, I'll start taking some of those. Those are spread trades. But overall, appreciate you guys. I'll be on tonight with Wolf for the stock picks. I'll be on with Amit on Tuesdays for Technical Tuesdays. And just follow, Paper Gains INC. And I could keep getting these DMs. I don't ask for money. I don't ask to trade your stuff in your brokerages. Come on. Come on now. That's not it. That's not me. Love you guys. I'll see you next week. Adios.